Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 23rd, 2025, and we are breaking down the Australian dollar versus the US dollar, or AUDUSD. This pair is at a fascinating juncture, influenced by a mix of fundamental news and critical technical levels, so let's get right into it. First, we'll cover the news, and then we'll dive deep into the charts to see what story they're telling. Looking at the current headlines, a major theme is the divergence in central bank policy. The U.S. Federal Reserve has been cutting rates, but plans to slow down, while Australia's Reserve Bank is holding its rate steady, with markets pricing in a potential cut in November. This policy difference is a significant long-term headwind for the Aussie, potentially driving the pair towards lower levels. Furthermore, China's patchy economic recovery continues to be a major factor. While Q3 GDP was better than expected, their manufacturing PMI is still in contraction, creating a mixed bag of signals for Australia, its largest trading partner. On the bullish side for the AUD, we're seeing some strength in commodities, which typically supports the Australian dollar. However, all eyes are currently on upcoming U.S. inflation data, which will be a massive catalyst for the U.S. dollar side of this pair. Analysts currently describe the pair as being trapped in a sideways range, broadly between 0.6400 and 0.6700, awaiting a significant trigger. Now, let's turn to the charts to see how this fundamental picture is reflected in the price action. Here on the daily chart, we can see the broader story of the last year and a half. The market was in a clear uptrend through the middle of 2024, culminating in a peak just shy of 0.6950 in late September. However, that uptrend came to a dramatic end. Let's zoom in on that period. Right here on October 4th, 2024, we saw a massive bearish candle that completely broke the market structure, initiating a powerful downtrend. This sell-off was aggressive, pushing the price down for several months. The market eventually bottomed out in early April of this year, with a significant low around 0.5913, a level mentioned in our news summary. That 0.59 level now stands as a critical long-term support floor for the pair. Since that April low, the price has managed to stage a recovery, climbing back into the range we are in today. Looking at the recent price action in September and October, we saw a rally up to the 0.6630 area, which acted as strong resistance. The price was rejected from that level and has since fallen back to where we are now, trading just under 0.65. This establishes a clear medium-term range. The primary resistance to watch is that early October high around 0.6630. On the downside, a key support level is the 0.6400 area, which has been tested multiple times in the past and is a significant psychological level. The last few daily candles are showing small bodies and wicks on both sides, which indicates significant indecision in the market. This consolidation perfectly matches the news narrative of traders waiting for the next catalyst, which is likely the U.S. inflation report. Now let's switch to the 1-hour chart to analyze the short-term picture. Here we can see the recent drop from above 0.6520 on October 21st. The price fell sharply before finding some footing around the 0.6475 level. For the last 24 hours, the price has been oscillating in a very tight range. This forms our immediate, short-term boundaries for price action. Immediate resistance is clearly visible at the 0.6515 to 0.6525 zone. A break and hold above this level would be the first sign of bullish strength. To the downside, the recent low around 0.6475 serves as our immediate support. If sellers take control and push the price below this level, the next logical target would be lower, potentially toward that larger 0.6440 zone. The lack of momentum here is palpable. The market is coiling up before its next move. For an even closer look, let's quickly jump to the 15-minute chart. As you can see, the price action over the last several hours has been extremely choppy and sideways. This is the definition of a market in consolidation, lacking any clear directional bias. This reinforces our view that traders are on the sidelines, waiting for that key inflation data to be released before committing to a direction. Trading within this tight chop is risky, and it's often better to wait for a breakout from the established hourly range. Alright, let's switch back to the daily chart to recap and look ahead. To summarize, the key price levels are absolutely critical right now. Keep your eyes on short-term resistance around 0.6525 and short-term support near 0.6475. A breakout from this immediate range will likely signal the next short-term move. On a larger scale, a bullish break would target the October high of 0.6630. A bearish breakdown would put the major support level of 0.6400 back in play. So, what are the potential scenarios? Let's start with the bearish case, which I see as slightly more probable at around 55% likelihood, given the long-term fundamental pressure from diverging central bank policies. If U.S. inflation comes in hot, strengthening the dollar, we could see a decisive break below 0.6475, pushing the price towards 0.6400. A daily close below 0.6400 would be a very bearish signal for the medium term. Now for the bullish scenario, which I'll place at a 45% probability. This would likely be triggered by a soft U.S. inflation print, weakening the U.S. dollar. In this case, a breakout above 0.6525 could fuel a rally to retest the formidable resistance at 0.6630. Sustained strength in commodity markets would also be needed to support this move. The most important thing to watch for in the immediate future is the U.S. inflation data release. This event will almost certainly be the catalyst that breaks the current period of consolidation. Also, keep an eye on commentary from RBA officials leading up to their November 4th meeting. Thank you for watching this detailed analysis of AUDUSD here on Explain the Charts. Before you go, please be aware that this video is for informational purposes only and should not be considered financial advice. The Forex market is highly speculative and carries a high level of risk. Always conduct your own thorough research and analysis before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on AUDUSD in the comments below. Trade safe, and we'll see you in the next video.